On this episode of Ask Gus at Advantage Federal Credit Union, we're going to discuss how to finance your summer fun, emergencies, and that dreaded college tuition. Welcome to episode 2 of Ask Gus. My name is Chris Kanya from 98.9 The Buzz, 98PXY, here with the general manager of the West Broad Street location of Advantage Federal Credit Union, Gus.
That's me.
Hi Gus, how you doing?
I'm good.
It's been a while since we did our last episode. I hope you got tremendous value out of it and of course education, and I hope that you're using it to meet, reach, and fight to get to your financial goals. It's summer. It's 70-something degrees in Rochester. And as much as we want to tell people, Gus, to save, and make smart financial decisions, we're going to spend some money.
Well, you gotta. You can't live your whole life in our igloo that we call Rochester.
Right. And we're going to try to help you figure out ways to spend that money that you're going to inevitably spend this summer, but in a way that doesn't put you in a gigantic hole for the rest of the year. Advantage Federal Credit Union right here offers amazing options to make smart choices when spending. Again, you're going to hear a lot of different places tell you have to save and cut and pay off debt, and while that is a priority for most of your life, again, summer, you'll probably find yourself spending a little more. So we're gonna try to hit the best of both worlds here.
True.
I think a lot of people have a go-to of putting stuff on a credit card, whether you're remodeling something at your house. We asked on Facebook what your big summer goal is, your DIY project, and a lot of people said a new patio.
Right.
Which can get expensive.
A few $1,000s at least.
Sure. So the first thing people probably think to do is throw it on the credit card.
Right, and that's not the worst idea in the world, especially sometimes if you're financing it with one of the construction companies. You may get a break on the interest. That's all great, but how often do you really pay it back before that introductory period expires? And then you're stuck. It's like, hi, I'm going to pay 29% interest for this $1,000 patio. That's where you can just transfer it over to one of our credit cards with a lower rate and no fees, and that's the way to go.
So it's a couple things to watch out for: is the introductory rate and the fees, and of course the interest rate, because then you get caught paying double, triple, quadruple what you originally borrowed. And I've been there. It's awful. You feel tricked even though you signed up for it. Another thing people probably have the goal of doing this summer is at least having fun and doing fun summer things, but also getting in control of their finances. If someone's trying to burn the candle at both ends and maybe consolidate the debt they already have, maybe the mistakes they made last summer that we already covered in the first few minutes, what's an option to, take control of that? Is that the debt consolidation thing that we could do for them?
Debt consolidation, balance transfers, just trying to take all the little things that every month you got to remember to pay. So, it's only a $20 payment, but if you're doing that times the 5 credit cards you have, putting it all together so that you're only paying one place, one amount, then you can budget savings, and it's a lot easier because you're not paying all these bills all at once every month.
And you may realize you can afford that vacation down to Myrtle Beach or go to Disney, because it's overwhelming to have 5 or 6 payments, like you said. If you can get it wiggled down to maybe one payment of $150, $200, it's one, way easier to see what you can afford, easier to budget, and 2, again, you might be able to squeeze out a couple bucks to go on a beach trip with the family
and save the rest. So if you're paying $250 now and you can consolidate it and pay $150, take that $100, save it every month, and then you just paid for your vacation.
And then if you have the means to, after summer, you could tackle that debt consolidation, because you could pay that off early without any penalty.
Anytime.
My girlfriend, Meredith, does it. You see plenty of videos of her on Facebook. We talk about her on the show. She came in here in tears for one reason and left here in tears for the exact opposite reason. It's not too good to be true. She's paying off a credit card way faster than she ever expected because of the debt consolidation. She's living proof, and she couldn't be happier. You can message her and ask her all about it. All right, now the big one. This is something that I just learned about because I'm not a homeowner. I never looked into something like this, but I'm so happy I have such valuable information before going into home ownership that I'm super excited to share it with you and learn more from Gus. It's called HELOC, Home Equity Line of Credit, HELOC, HELOC, the Home Equity Line of Credit. Can you tell us what the heck that is for people who don't know?
It's a line of credit, which basically is you borrow, you pay back, and then it's available again to borrow. It works similar to a credit card, except it's not a credit card. You're basically using the equity, which is the value of your house after what you owe on your mortgage, to borrow money against. And what that does is it gives you a much lower interest rate than anything else out there. Plus, you can use it for anything you want. So a lot of people use it for larger projects. One of the things I know you've mentioned in your shows is college tuition, because I know U of R and RIT are like $60,000 a year, and I sure as hell don't have that in my pocket to pay for my son. So hopefully he gets scholarships. But
it's not always the case.
It's not always the case. Or the patio we talked about earlier. That's another thing you can use it for. Some people, roofs, anything that you could possibly want. It's a great low-cost way to finance those larger, unforeseen things that come up in life.
And people probably get scared at the fact that you're borrowing against your house. Really, it's not as scary and harmful as it sounds, correct?
Correct.
As long as you maintain it and you have good intentions and actions to pay it all back.
If you pay it,
right,
we're good.
And does it help or your credit, or we don't know for a fact? It depends on the situation.
Well, it's another mortgage. So my situation, to give you a brief rundown, I have a mortgage on my house. I only have a few years left to pay. And
congratulations, by the way. Nice.
Yes, thank you. I needed to finance a roof and some other home repairs, so I ended up taking out a HELOC because my thought on it was I could have borrowed $20,000 and paid back the 20 and then been debt free, and that was it. But then if something else comes up down the line and I got to go and do another loan, another application, start the process all over. With the line of credit, I pay the $20,000 back, I have that 20 available. Next time something comes up, I have $20,000 available. I can just write a check, pay it back, use it over and over and over again.
It sounds like something too good to be true. And listen, it's not free money. There's no gimmicks or anything like that. There's interest involved. But the one of the most important things that I've kind of looked back and learned on me getting out of debt, $22,000 in 6 months with zero debt 30. The biggest mistakes I've made, besides getting organized and not executing on my budgets, is not researching the best options. I'm impulsive. I see something, I hear something in a radio commercial, I want it instantly. I don't care how I have to get it. I don't care where I have to sign and what dotted line. Maybe you've been there, hopefully earlier in life, maybe not recent because you're established now and you're educated on finances, but that impulse is what gets you in trouble. Learning about options at Advantage Federal Credit Union, like balance transfers and debt consolidation and this HELOC thing. I'm jealous of all you homeowners at this point. You have the option, a good option, a great option to get that new patio or even just patio furniture if you don't want to go crazy at first, if you want to learn about this on your own and take those baby steps. So it's awesome. It's awesome to have that option, especially when you're able to do it more than one time. You have it open. It's open.
It's open. It's there. You can use it over and over again. It's good. You do it, and the process is easy. Give us a call. We'll go over all the options for you. Different amounts, different rates, but it's all very simple. We make it as easy as we can.
Mm-hmm. And that's the point. That's the point of the options that Advantage offers, is to make it as easy as possible so you maybe go from a debt consolidation to a balance transfer, then to a HELOC, because it's intimidating. It's intimidating to say, here's $20,000. If you don't pay it, we own part of your house, or we will come after you, or whatever. And that's not the plan. That's not what's going to happen. But it's an option, and it's a good option, and it's an option that you should definitely come see Gus about and research. What do you got plans this summer?
Going to Massachusetts, hopefully.
Very cool. Very cool. And you're probably able to finance that on the good decisions you made in the last half decade or so. That's where it all builds. You're gonna think about this video 5 years from now when you started making good financial decisions and think about where your life went from here. We appreciate you watching episode 2 of Ask Gus. Any questions, you come out to the West Broad Street branch, talk to Gus. He's the general manager. He's the wealth of knowledge of financial knowledge and options for you and your children and everybody's future. We thank you for watching, and we'll see you next time.
Thank you.